The GDP numbers for the fourth quarter and the full year FY18. The Reserve Bank and CSO estimates, remember, were pegging the full year GDP number at 6.6%, but a CNBC TV18 poll for the fourth quarter alone pegs the GDP, remember, at 7.4%. Ekta Batra is also with us, and in a bit we are going to be joined by a whole host of economists. That's the GVA number, 7.3% expectation for fourth quarter. Ekta is with us. So Ekta, very quickly, just the two big poll numbers that we should know, Q4 GVA and GDP number.
Yes, absolutely, Lata. Well, like you mentioned, the GDP data is expected to come in at 7.4% on a Q-on-Q basis. That would be a 200 basis points increase. And we also have the GVA, which would come in at around 7.3% this time round. So that too would be a bump up on a Q-on-Q and year-on-year basis. I just want to give you a sense that the reason why we're going to see that bump up is going to be industries, because that's expected to come in at around 7.5%, led by the likes of manufacturing, which is expected to come in at around 9% this time.
Okay, so the GVA number in FY18 is expected to come in at 7.3%.
For FY18 as a whole would then depend upon, GVA is not an estimate which is provided by the CSO.
No, I'm only asking you what is your Q4 poll, your Q4 GVA poll, I think is 7.2%. Okay, yeah. So 7.2%, this is coming on top of a 5.6% year ago. Remember, year ago, the GVA was hit by demonetization pressures, which explains why you're expecting a substantial rise in the GVA number in the current quarter or in the quarter under review. We are joined by Dr. Pranab Sen, the former chief statistician, and I think we've got the number. This is 7.7, but I can't get what exactly is 7.7. Okay, the Q4 GDP number is coming in at 7.4%, 7.7% versus a poll of 7.4, in which case the GVA number should also be fairly good. We're just waiting for what the GVA number could be. This is by itself an excellent number, 7.7, but we should shortly be getting the full year GDP number as well. So it's 5.7 in the first quarter, 6.5 in the second quarter, third quarter was 7.2 and 7.7 in the fourth quarter. Of course, it had the advantage of a very low base of about 6% GDP number. Well, just with this number, let me go to Dr. Sen. Sir, the FY18 full year GDP growth has come in at 6.7%. A tad better than what the CSO had forecast at 6.6. So that's the full year number, 6.6 GDP and 7.7 for the quarter. First thoughts, Dr. Sen?
That sounds about right, because the discrepancy could be just due to, sort of estimation of what was going to happen post GST. Okay. Because, you're talking about the net indirect taxes effect. So, yeah, it seems to validate what CSO had said earlier.
Okay. Okay, this is the GVA growth number that we are getting. For the full year, it is 6.5%. I think that's what RBI forecasts normally. It forecasts the GVA number, and this has come at 6.5. If I remember right, I think the RBI forecast it at 6.6. So it's 6.5% GVA number for the full year. For GVA, and the full year GDP number has come in at 6.7%, right?
Yes.
Okay, we are still awaiting more details as to what would be the agri and other details. Okay, here's the nominal GDP number that's come in, I think, at 10.9%. Okay, that's not of much use, but 7.7% is the Q4 GDP number compared to 7% in the third quarter. Okay, we should be able to give you more details in just a bit. The agri and the other details. Okay,
we have Ashima Goya joining in, maybe for a first reaction. She's the member of the Prime Minister's Economic Advisory Council. Ashima, what is your sense? Because we've exceeded the GDP estimate by the CSO by just about 1% at 6.7% versus 6.6%. And for Q4 of FY18, GDP itself has come in at around 7.7%.
I think the steady improvement, nothing very spectacular. So it seems that, in my view, it's more sort of reforms that are, and some revival in demand, which is responsible for this.
Okay. Well, just a minute. We should be getting the agri and other.
We have the agri data, Lata. That's coming at 4.2%, I think. It's a little above 4%. And if we could pull that up, so that would compare to our poll of 3.5%. So that is definitely above what the street was anticipating. The range anyway was 2 to 5%. So it's coming at the higher end at 4.5%.
Okay, that's the agri number. I mean, this the website is just playing a little hooky at this point in time. We have the per capita GDP number that has come in at 5.3%. So that's not terribly impressive. 5.3 compared to 5.8 last year. So quite clearly, per capita GDP number not looking terribly impressive. We should be able to, okay, there's a whole host of numbers which we are not able to give you very quickly. Just coming to
mining growth is coming at 2.7%, so that would be versus an expectation of around 1%. And I think trade, hotel, transport is disappointed, Lata. We were expecting, or the street was expecting, at least double-digit growth.
Okay, now
there.
I think I have the entire set. Agriculture has come in at 3.4% for the full year, that is 17-18. Agriculture coming in at GVA, that is coming in at 3.4%. Mining and quarrying coming in at 2.9%, manufacturing coming in at 5.7%. These are all full year numbers. GVA I think it's full year numbers. And then electricity coming in up 7.2%, construction 5.7%, trade and hotels 8%. Well, finance, real estate and professional services 6.6%. Public administration, that's the big one. 10%. So looks like a lot of government expenditure accounting for this 6.5% rise in GVA at basic prices. So it's a 6.5% GVA growth year on year, and that's largely supported by a big growth in public administration, defense and other services. Okay, with this breakup, Dr. Sen, first thoughts?
First thoughts is, what we've been discussing. I think, again, it's really no news, which is that, private consumption doesn't seem to be doing very much as yet. It's really public expenditures which seem to be pushing things along. And so, what you see as public services and defense is really the consumption expenditure. And I'm sure when you get the breakup of investment, again, you find that public investment should probably be the driver there as well.
Okay, I'm still trying to get to that gross fixed capital formation and basically the expenditure side. But Soumyakanti Ghosh is also with us, the Chief Economic Advisor at SBI. Well, Soumya, what are your thoughts with the breakup that I told you? 3.4 for agriculture, manufacturing 5.7, electricity 7.2, construction 5.7, trade hotels 8%, finance, real estate, professional 6.6, public administration 10%, overall GVA 6.5.
No, I think the numbers are largely in line with our expectations. So we are pegged a growth rate of 7.6%. And I think the numbers stack up the way we are thinking. Agricultural sector has done well because if you look into the advanced food grain estimates, that have done better. But I think the sector which has done quite well, and I can see the numbers flashing on your screen, is the construction sector, which have posted a double-digit growth rate, I think around 12 to 13% in Q4. And that was largely expected, but it is more than the expectations because cement and steel have actually done quite well. And the other good thing is that if you actually look into the core GVA number, that means if you net out the, if you just purely take the private part, that has actually accelerated to 7.2%. So my sense is a good set of numbers. Manufacturing also, I think the Q4 number should be better because the year-end growth rate is around 6%. So that means manufacturing, agriculture and construction are the three big takeaways from this the Q4 GDP number.
Ashma, what is your sense in terms of the industry's growth this time round? For example, manufacturing has come in at 9% for the quarter. Do you expect this kind of momentum to probably continue into the remaining part of the year based on the kind of high-frequency data we have?
Yes, I think so, because it shows that I think it is coming from the bottom, from consumer expenditure. After a long period of slowdown, probably capacities have sort of come down somewhat, and I'm looking for the investment number. That is also...
Yeah, gross fixed capital formation is 7.6%. That's the only number I have been able to calculate. Ashima, 7.6% gross fixed capital formation, that should be a satisfying number.
7.6, this is annual. What about...
Yes, annual. No, I'm still struggling with other numbers.
It has an increase over the last quarter.
Okay. Any other thoughts? I'm just trying to get you the quarterly numbers as well.
A lot of emphasis on distress in the rural areas. This agricultural growth suggests that there is diversification to other sort of high-valued items and other sort of income sources. So that is a very hopeful number. Then construction doing so well, again, suggests that maybe low-income housing and RERA has settled, and so there's a source of employment, which is also a good number. But I'm not, another thing I would look for is whether we are really past all the GST and the monetization efforts, or the informal sector has come up. Their trade doesn't seem to have done so well. So I think we can see a further boost as these, and exports, that's another number I'm looking for. Do you have it? Export growth?
We are still struggling with the table because there are too many tables over here, and many of them are annual tables. At an annual level, the exports have grown by 5.6%. And at an annual level, the gross fixed capital formation, government final consumption expenditure is 10.9%. As I told you, capital formation 7.6% and private consumption 6.6%. Okay, these are annual numbers. I'll get to the quarterly numbers in just a minute. Ashima, please hold on. I'll give you the quarterly numbers. But Dr. Sen, would you want to comment on this? Private final expenditure is at 6.6, government final expenditure 10.9. Gross fixed capital formation 7.6 and exports 5.6%. So that makes up the 6.7% GDP. Yeah.
The good thing out here is that after a while, we are actually looking at the fixed capital formation as a share of GDP going up.
Okay.
And that is a very hopeful sign. We haven't seen it in a while.
Okay.
But again, as I said, what I would really want to know is the breakup between public and private, because that will give us a sense of what's going to be happening going forward.
I told you for the annual numbers, the private final consumption expenditure is up 6.6 and the government final consumption expenditure is up 10.9%.
No, fixed capital formation.
Okay, fixed capital formation 7.6% for the full year.
Yeah, that's public and private both.
Yeah, I'm sorry. Yeah, we don't have that breakup. Okay, so I'll just come to you all with the quarterly numbers as soon as I can lay my hands on them. At the moment, I'm getting a whole lot of current prices, so still not able to get the quarterly numbers. Let me go to DK Joshi. Mr. Joshi, from what you have heard, is there any specific comment in terms of the trends?
Yeah, I think the first comment I would like to make is that we have seen three estimates for 17-18, and I think in all the three we have seen GDP being revised upwards. I think the first estimate GDP was at 6.5%, then it became 6.6, and now it is 6.7%. The other issue is, which Dr. Sen was also alluding to, the gross fixed capital formation has grown at 14.4% in real terms in the fourth quarter, which means that the share of investment in GDP has moved up. So that's a positive sign. I think in addition to that, the PFC obviously slowed down. I think, as was indicated earlier, I mean, it's largely the impact of demonetization that's showing up in private final consumption expenditure. And I'm sure, I think the trade would have been a drag on the economy because imports, I've not seen the data as yet, but the imports obviously have grown faster than the exports. So the net trade would have pulled down the GDP.
Okay. Any further data that you could get quarterly, Ekta? I mean, I'm still struggling with...
Well, just the data with regards to what you had already mentioned, Lata, in terms of the gross fixed capital formation, as well as the exports, just based on what is reported, I think we still need to calculate it. It's showing 19.5%.
No, that must be current prices.
Okay, so that's the
constant
current
prices. They've said it's 5.6%. So exports clearly have not done well. But that is all those are annual numbers. I'm still trying to get at the quarterly numbers. Soumyakanti Ghosh, is there any luck with you in terms of the quarterly numbers or any comment on the annual numbers?
No, annual numbers are largely in line with the expectations, and I can see that all the estimates that the CSO has given out for FY18, I think the agricultural number, the construction sector number, and if you look into numbers, I think most of them are close in line with the expectations. And the only disappointment which I can see in the service sector is the trade, hotel, transport and communication sector. I think the transport sector has done quite well. Possibly it's a slowing down of the communication sector which has pulled down the overall segment in terms of the growth rate.
Okay.
Okay. Just actually wanted to extend that point forward to Ashima also. The trade, hotels, transport has actually only come in at 6.8% in terms of a growth versus expectations of at least around 9 to 10% that the street had. What is your sense in terms of why there was a probable pull down in this particular segment?
I think it again suggests that the informal sector has not recovered that well from GST or I'm able to get the fourth quarter.
No, I'm sorry. The website is not very helpful, so I'm not able to really make out the fourth quarter numbers.
I'm saying exports are lower, 19.5% of GDP, Q4 compared to 20.4%.
Okay.
So that is the percentage.
Not recovered from GST. So, this very good performance of manufacturing is probably driven by, and even consumption demand is lower. 54.6 as a percent of GDP compared to 59.3 in Q3.
Okay.
So it seems that it's all driven by partly government expenditure.
Public admin.
Okay, so yeah, you're right. It is 54.6 is private expenditure, and yeah, it's clearly government expenditure that seems to be driving, and that has risen much faster than private final consumption. Exports as well not done as well as the previous year. But even now, I'm still struggling with the quarterly numbers because it's a very, very hazy print. Yeah, it's 19.5 for exports growth in the current year compared to 20.2 in the previous. So clearly, even exports as a percentage not done as well as last year. Any further thoughts, Dr. Sen, from this breakup?
No. As I said, that it sounds as if public expenditures have been being the main drivers. The private sector, whether it's trade or it's private investment, possibly haven't really fully recovered yet. The worrying thing, of course, is the consumption. And Ashima is right. The effects of GST and DEMO are probably still there in the informal sector, which gets reflected in private consumption.
Okay.
But having said that, the real question is that what has happened to private investment? I mean, can we expect that to become the driver in the current fiscal? And we haven't got that number yet, I think, because unless that has stepped up, the government is going to have a problem in maintaining this pace of public expenditures. Okay.
Well, actually, gentlemen, it is a struggle to be able to give you the quarterly numbers. I'll just take quick comments from all of you on the annual number, because that's about all we are able to get at this point in time. You go first, Soumya. Your thoughts on the annual number, 7.7 GDP and 6.7 GVA number?
No, I think 2 points over here. The numbers are largely in line with the expectations, or even in fact better than the market expectations. The second thing is that the numbers have some of the sectors have done quite well. Agriculture is one of them, construction is one of them. But there is some disappointment on the trade sub-segment. I believe that the trade and the communication segment has done quite badly. And looking ahead, I believe that this trend in these numbers could actually continue well into the Q1 of next year, because we are also working with the lowest base of 5.7% of I think Q1 of FY18. So hopefully these numbers could actually top 7.6% in the coming days.
Okay. Well, any thoughts, Mr. Joshi, from these numbers? I mean, I know we have only given you the annual numbers, but any thoughts?
Well, I think one is broadly in line with expectation, and second, the gap between the GVA and GDP has shrunk quite a bit. I mean, there used to be at least 50 basis point gap, which I think over for 2017-18 has become narrow. And I think the good news is on the construction and the manufacturing front, because construction activity is highly labor intensive. So construction moving up augurs well, particularly for the rural folks. Because I think that's where the focus of construction is right now.
Okay, I finally got one private final consumption expenditure number that has risen by 6.6%. Hopefully, we should be able to give you the government final as well. But it's a 6.6% Q4 growth in private final consumption expenditure. Well, Dr. Sen, in a minute, I should be able to give you the government consumption expenditure as well. Would you want to comment on this 6.6% growth in private final consumption expenditure in the fourth quarter?
This is the thing. This is again, the problem is that the private final consumption expenditure growth is lower, quite significantly lower than the corresponding figure for GDP. Now, what that essentially suggests is that the private final consumption isn't doing very much. And that's a little worrisome.
Okay. Okay.
Because, you know, with an agricultural growth rate of 3.4%, which is very good, and it's 4.5 in the fourth quarter, which is even better, one should have expected the private final consumption to have performed better.
Okay.
But, you know, the problem has been prices.
Yeah.
The problem has not been production.
Okay. So, just a minute. We also have now the government final consumption expenditure for the fourth quarter that has risen by 16.9%. So, it's largely government investment driven. Private consumption 6.6%, government expenditure 16.9% higher in the fourth quarter. Now, does it look like it's even weaker in terms of private growth?
Okay. You know, the government final consumption expenditure is going to fall in the current year.
Okay.
Because, you know, you had all sorts of, states giving effect to wage increases, the HRA being revised, all of that stuff has been happening. Now, that's not going to be there next year.
Okay.
So that's going to come down. And unless the private final consumption expenditure goes up significantly, what you're seeing is a downward.
But well, I think the most positive number we've got so far is that gross fixed capital formation for the fourth quarter is up 14.4%. So that, I think, is the best number that we have got. Is that a promise that next quarter will be better, Soumya? Okay, looks like Soumya can't hear us. Dr. Sen, last thoughts from you. Gross fixed capital formation, fourth quarter up by 14.4%.
Yeah, that's kind of expected, you know, given the fact that construction has gone up quite significantly. But again, as I said, if that is essentially being driven by public infra expenditure, it doesn't allow us to draw any conclusions about the momentum in the current year.
All right. So we'll wrap it up on that note. We will have to pore over the numbers since there are so many of them. But on the face of it, it doesn't look like a bad set of numbers. Clearly, the Q4 GDP is better than expected at 7.7%. And in particular, capital formation in the fourth quarter looking very good. So that's the positives that we have got from the GDP numbers. Thank you very much for watching this special edition of the GDP numbers. But